The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Wednesday morning, just after 9 a.m. Eastern Time. We got a Fed decision coming at 2 p.m. Eastern Time. We have a press conference at 2:30. Especially interesting in light of the action in the market yesterday. And boy, you talk about a rally and a give up. We'll talk to our man Kevin Hincks after 9:15 this morning, as we do every Tuesday, Wednesday, and Thursday. And I was thinking this morning as I was getting ready for the program, I had mentioned to Kevin yesterday, okay, and to zoom in on the chart yesterday, right, there was your it's actually 8:15 acceleration. We'll talk about that in a moment because the 8:30 bar, okay, was the one that started at almost 4,090. Meanwhile, there was buying preceding that for a few minutes. Bloomberg's got a big article on that this morning, just talking about the buying that preceded the CPI print that beat, that actually accelerated things even further before the give up. But I was talking to Kevin yesterday, and there is the bar that I was talking to Kevin in at about 9:15 to 9:30. Markets were chopping around near the pre-market highs above 41.40. And I mentioned, we got a lot of optimism in this market right now. I said, I'm not sure we'll go red by the end of the day. But, boy, there is a lot of optimism priced into these projections to the upside. What do we do, folks? Well, yeah, you gave it all up over the period of, by like noon. The market was back to below where it was prior. And, boy, we're going to talk about it because it is interesting. Not often do you see a huge acceleration prior to such an important data point, right? There's your 8:15 bar, folks. The CPI did not come out until 8:30, okay? Now, putting it even on a 1 minute to see the action, can we go back that far? It's not going to get us back that far, is it? Yeah, 1 minute doesn't get us back yesterday, right, exactly. But you can see that it was actually about the 60 seconds preceding that this market just skyrocketed higher. We gave it all back. It was a decent CPI print, but not exactly what the market was looking for to trade up 4% on the NASDAQ. We give it all back. We come into today, and Chairman Powell, we'll see what he has to say at 2 o'clock. We'll see what he has to say in his press conference at 2:30. And the market, I don't know. Normally, you'd get a pretty calm market once we get into the afternoon. But after yesterday, man, you might see some trail ends of the volatility from yesterday curtailing into today. We jump over to the VIX to kick things off. You spike to a low of 21.46. You accelerate to almost 24 yesterday. Where are we? We're right back to where we were, man, on Friday's. Is that Friday's action? Yes, it is. That's on Friday's action. Is that right? Yeah, that's Monday. That's Friday's action. Right back to where we were on Friday on the VIX. Forget about what's happened this week so far. NASDAQ, slightly lower by about 20 points right now. We got the Dow. Dow was at 35,000 yesterday. We're at 34,385. You got the Russell, negative by 1 this morning. Bitcoin, the most remarkable thing of all going on right now, folks. Bitcoin gives nothing back. Bitcoin's almost at the highs that we had yesterday, right? Remarkable, man. Bitcoin yesterday on that volatility spike on the CPI started at 17,400, spiked up to about 18,000. Bitcoin's trading at 18,000. Of all the instruments not to give up the acceleration yesterday, crypto hanging near the highs. We had some action in the dollar index, et cetera. But as you see, gold didn't give it all back. So there were things that mattered yesterday. Okay, the market gave it all back. But you look at where gold is. Gold was at 1,800 when that rally began. It's sitting at 1,820. Yes, it spiked to 1,836, but not exactly a full give back. Silver, a little bit higher as well. Silver started that rally at about 23.70. We're trading at about 24 right now. We jumped to notes and bonds. Didn't give that one back as well. Notes and bonds from 114 up to 115.11. You're still 23 ticks above where we were. And boy, this might be the most decisive one of all. As in, if that's a breakout, if that's a retest of the channel line and a breakout, to our man Bud Rolf's the channel master, man. Always thinking of him, man, especially when I see these retests of the channel, folks. Bud, an old technician at TFNN, he used to say, you break out of the channel line, that's not the buy. What do? You let it come back and test that channel and you break out. That's a decisive break, man. That was yesterday's bar. We're still well above that price level at 114.24 in the 10-year. The 30-year, right now, negative 8 ticks. Not exactly the same action on the 30-year, but you don't give it all back as well. 131, we'll call it, in the 30-year. We'll talk to our man Kevin Hincks right after the break. We'll talk to our man Teddy Kegstad at 40 past the hour. We talk a little bit of Forex. Dollar didn't get it all back, man. Dollar was pushing almost 105 at the beginning of that drop-off. We made it to 103.58. Right now, we're flirting with about 104. So as you see, there are impacts in the numbers in terms of currencies, dollar strength, yields, right? There's stuff happening as of yesterday, even though the markets gave it all back. So it is interesting. So what do you have? You have the dollar index, you have dollar weakness, okay? You have lower yields, and the market doesn't budge. Not sure that's a good thing if you're a market bull out there, that you get dollar weakness, you get lower yields on the heels of a CPI print, which is causing, right, lower yields, dollar weakness, and the market can't even catch a bid. It catches a bid and gives it all back and then some, really, is where you are. We jump over to the euro. Euro US dollar, 106.36. Doesn't give it back either. You got dollar weakness, you got euro strength. And I've talked about this one, man. You want to see a breakout and a retest of the channel line? Pull up the euro on a daily, folks. You don't even need the lines on there. You can draw them yourself. You match up the top portions. You match up the bottom. You see it break out of that euro about October 21st. You come back, you test that channel line, and that's the decisive break you want to see when you're breaking out of a channel, man. And look at this thing. It's not looking back, man. 106.36, and we'll finish up the wrap-up as we jump over to the dollar yen this morning. 135, we'll call it, on the dollar yen. All right, let's jump around. As I mentioned, talking about the acceleration prior to the CPI print. And this is the headline square on the front page of Bloomberg. That's the market's front page. You back it up. That's the headline, man, that they're pushing out. In 60 seconds before CPI print hit, heavy trading drove mystery rally. Well, it turned into a mystery, man, as it all gave it up and then some. And of course, they're talking about a leak. Of course, you have the White House denying it, okay? But they wouldn't know anyway right now. That's the bottom line, okay? Of course, they're going to downplay it. People downplaying it. And listen, people get ahead of trades sometimes. You could have been wrong. But very rarely have I seen that type of huge acceleration on the S&Ps prior to such an important number being out there. You had futures numbers spiking a full % prior to that number. Trading and Treasury futures surge, pushing benchmark yields lower by about 4 basis points. All of that happening prior to the number. Significant, quote-unquote, trading activity ahead of market-changing news is suspicious and typically worthy of looking into, for all intents and purposes. And that is Jerome Selvers. Who is he? Chair of the Securities Regulatory Enforcement and Litigation Practice at some law firm. This is unusual, especially given the reduction in the inflation that was reported. Yeah, not only were they ahead of things, they were correct. Somebody will look into it, whether it's industry or not. You should look into it, okay? Over a 60-second span before the data went out, 13,000 March 10-year futures traded hands. What are they trading, folks? They're trading yields, right? Because you know that CPI, where's it's going to hit? It's going to hit the price of yields. It's going to hit the Fed. It's going to hit the dollar, of course. During a period of activity is usually non-existent, folks. Yeah, the 1 minute before, people are usually keeping their hands dry. There's a lot of risk. It's tough to make a market when you're seeing that type of volatility even, right? Where the market's about to pop, what, 1, 2, 3% in a heartbeat sometimes? And yeah, you had 13,000 contracts trading, and guess what? They were right, folks. The CPI came in under expectations. And the internals on that CPI number were almost better than some of the headline numbers. I talked about them a little bit yesterday. Interesting. Interesting can mean a lot of things. Interesting, to say the least. Stay tuned, folks. We'll be coming back talking to our man Kevin Hincks after the break. S&P's flat. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sign up for Basil's live webinar airing this Thursday, December 15th. Basil Chapman will be hosting his first ever live trading webinar just in time for the holiday season. While Basil will focus on the S&P E-mini futures, other symbols from gold, crude oil to natural gas and more will be traded as appropriate. Basil will demonstrate specific Chapman wave techniques as well as answer questions live. Spots are limited and Basil goes live Thursday, December 15th. You don't want to miss it. To sign up, visit the front page of TFNN.com. TFNN, educating investors.
Welcome back, folks. We have the S&Ps flat right now. NASDAQ 100 barely in the red. You get the Dow barely in the positive. Let's jump over to our man, Kevin Hincks. Every trading day, folks, right here on Tiger TV, the TD Ameritrade Network at noon Eastern time with Fast Market. Your host, Kevin Hincks, Tom White, the team at TD Ameritrade Network. They got some great guests on there, folks. They break down the day's market action. They walk you through hypothetical trade setups, usually 3 of them during the program. All of them using options. If you want to learn about options in any way, folks, whether you trade them, whether you just want to learn about how they're priced, delta, gamma, theta, all of it, check out the program every day at noon Eastern time. Kevin Hincks, quite a day we got going yesterday as we come into today, man. Good morning.
Good morning, Tommy O'Brien. Yeah, the question is today, do we get a reaction to the Fed or an overreaction to the Fed like we got yesterday? Yesterday was an insane overreaction. Tommy, here's the stat that really jumped out at me yesterday. The high on the E-mini future yesterday morning, pre-open, was 4180. The high on the SPX, the cash market, was only 4100. So think about that. 80 points, 80 S&P points between where the futures went and where the actual stocks went when they opened. So, I mean, overreaction, that was a rally yesterday that just was destined to not necessarily fail, but not keep up the pace of what it was. And today we'll get a Fed move that is pretty expected to be 50 basis points. But then what does Jerome Powell say in his press conference? That usually is what moves the market, Tommy. So we'll wait for 2:30 Eastern time and then buckle up, as you know.
It is interesting, Kevin. I was thinking when I chatted with you yesterday, I said something like, boy, we have a lot of optimism priced in this market, Kevin. I'm not sure we'll go red, but with the NASDAQ 100 up 4% right now, as I was chatting with you, where is the room to the upside versus the optimism priced in? And shame on me for saying we won't go red, man, because as this market has taught us, folks, anything is possible. That's why I love watching Fast Market, and that's why I like to find risk sometimes, man, because, boy, if you'd asked me if the markets would turn red yesterday, Kevin, I would have been pretty confident. No, I might have been, bearish from the open, but I don't know if I would have said they gave it all back, man. So we get a lesson every single day. Fast forwarding, as you said, to the Fed today, Chairman Powell, I'm sure he was watching that market yesterday, sipping his coffee in the morning. I'm trying to, this is my own take, right? So the market is pretty confident that he's going 50, and then I can imagine what he may be saying, which is tempering down, all the expectations that blew out of the water yesterday. I mean, do you think, what do you look for surprises, Kevin? As in, I'm trying to even imagine what he could say that would surprise, because he's been pretty clear in terms of we may be higher for longer. We may be higher than the market thought, but guess what? It's time to look at the totality of the moves. And I feel like this is just kind of playing out, and he's going to maybe put the similar message out there. Is there anything that you're looking for that he could say that might be able to drive this market one way or the other?
Tommy, normally, historically, Jerome Powell is a delivery mechanism of news or information to the markets that the market likes. They generally like what he says. Take out Jackson Hole, where he scolded the markets for their overreaction. So I expect him to say things like, we're not, still work to be done. We're going to keep at it. Inflation is still too high. But he's going to also acknowledge that the market has gotten better. So it's just a matter of how he words it, how the market reacts to it, Tommy. The market has already, in a way, reacted to it. But we'll see how that happens. I think that the speech he gave a week or so ago and the market reaction to that was significant. So, Tommy, I think you just got to let it play out. But like I said, historically, Jerome Powell delivers things to the market that they like, even when it's bad news. Take out, of course, Jackson Hole. So I expect Jerome Powell to stay on topic for sure.
And if the market likes it, they should like it, because right now, man, all things considered with the market, we're well off the highs of 4,800 in the S&Ps, but we're sitting above 4,000 right now when we've been flirting with 3,600, 3,500 on a couple occasions. So all things considered, the market anticipating some better news than what they were fearing at some of the lows that we've seen. With that in mind, Kevin, what are you guys talking about beyond the obvious coming up on at 12 o'clock today?
Yeah, we'll look at Lennar. That's got earnings coming out after the bell. We'll look at, Foley will do a presentation on Penn Gaming, and we'll look at some of the casino stocks like that. And then we'll look at a name in the news today, Delta Airlines, and their massive upgrade of not only full year 22, fourth quarter 22, and all of 23 earnings. Their CEO, Ed Bastian, coming out this morning at their investor day and absolutely sounding the trumpet for better earnings. The quote that he said, Tommy, this morning was, "Restoration of our financial foundation." So we'll take a hard look, especially after a bad day that all the airlines had yesterday. We'll look at Delta today.
Nice. And I got the Delta chart up here on the Thinkorswim platform. Been trending down almost for like 18 months, man, since they were above $50 in the early part of last year. So much for that travel resurgence, but a tough one. I'll tell you, Kevin, Lennar. So I'm out basically in the middle of Florida, near Lakeland, Florida, and we have a development near us, Kevin, that I think it's like 800 houses, 1,000 houses getting built in there. Lennar is one of the builders that's in there, and we take walks around the neighborhood. It's pretty cool, folks. They're building out an entire neighborhood. So imagine, Kevin, they're building out the roads, they're building out the electric, they're building out the water. We watched it go from basically being cowland, which was pretty cool. We could take the kids to walk, see the cows. They're not there anymore, unfortunately, but watching it all get built. So now they got the houses up. They're already selling them. We walked in, and they got a 4-bedroom house, folks, with like 1,700 square feet, so small bedrooms. But I walk in there, and they had already sold 90 units, Kevin. Now, this is the salesman, okay? So they have their agenda telling me that 90 are already sold. But I kind of believe them because they couldn't even talk to us. They were going to another meeting. They had sold 90 units, and they're already putting people in the houses. And I said, man, maybe it's not as dire as sometimes you see there, because as this was getting built, it was remarkable saying, man, how are they going to get rid of all these houses right now, right? With rates going up to 7%. And what's going on, folks? The moment those houses are built, we're watching families move into them. We're watching cars in the driveway already as the house next door to that house is getting built. So it's interesting, man. And Lennar, well off the lows of $70, sitting at about $91 this morning. Kevin, I appreciate the time, man. And of course, a busy morning as always. We'll be watching the program today, and we'll talk to you tomorrow, man. Enjoy talking to you, Tommy. Have a great day. Always a pleasure. Folks, tune in, especially on Fed Day, man. We may see some volatility. You heard it. They're talking about 3 great stocks, Lennar. And as I said, man, you should see this neighborhood they're building, folks. And I was a little floored when I walked in there because we wanted to see the model house, right? Beautiful house. They're building beautiful houses for sure. We wanted to see the model house. 4-bedroom for low square footage. Now, each of those bedrooms, as you can imagine, folks, very, very small. You know, I was saying, I don't know if you'd want a 4-bedroom with each being that small. I'd almost maybe go for a 3-bedroom with 1,800 square feet. But if you got small kids or you just want an office and 2 small bedrooms, whatever it is. So we walked in to see the sales agent just to get the floor plan. I just wanted to see the dimensions of those bedrooms. They didn't even have any printouts of the floor plans anymore because they had given away so many that day. It was like a Sunday or something like that, or a Saturday. And the woman salesperson said that they had sold 90 units that day. Now, I interpreted that to mean they had sold the 90th unit of the development that day, because if they sold 90 units that day, folks, this stock better be at 120, man. That's selling basically a house every 5 minutes for the entire day. Nonetheless, 90 units, selling it in an environment like this, I mean, pay attention to it, man, because I couldn't believe how many houses, the moment they're getting built, folks, they're selling them. People move in right now. So it's not as dire maybe as the market pushing, as rates a little bit lower. That's one of the stories I got later in the program. Stay tuned, folks. We're going to be back for the open. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you're looking at an S&P basically flat right now at 4,054. As I said, going to be interesting to see how the market reacts today after the volatility from yesterday. Once we get near that 2 p.m. Eastern time frame, yeah, I imagine things may cool off a bit, but we're getting a little bit of a bid. NASDAQ 100 was just down 30 points as we were coming into the open. A little bit of a pop right now. Dow up 45. Absolutely remarkable, the Dow, man. Okay, you check out the Dow. I'm going to back things up on a 3-year weekly. Okay, no, I got to go back. Yes, 3-year weekly. And just to see where we are, folks, you are like right near the highs of the Dow. Yesterday, we were at 35,000 and change. Yesterday, folks, you were in basically the final week or two of the year last year. That's all of the bull market, folks. And when you put things back, okay, now let me take these off for some clarity here. I mean, just keep this in mind when everyone's talking about how dire things are. Now, the Dow, folks, okay, is one of the most misleading indices, I could say. It's an important one. I've heard our man Basil Chapman talk about it a lot, and you can like the components of the Dow tremendously. Okay, what I have a problem with most of all is that it's a price-weighted index, which makes 0 sense at all, because the price of a stock actually means nothing, folks. Do you know that? The price of a stock means nothing because you have to multiply it by how many shares there are. So why would you ever have an index that is traded off the price of that stock when the price actually means nothing? That's the biggest beef with the Dow. But this thing is in a run from 6,000 to 36,000, and you're talking about a bear market where we're within about 1,800 points, well, we were yesterday, from the highs. Keep it in mind, folks, okay? Now, not exactly the same deal as the S&Ps, but still, in the context of the run we've had, pretty dramatic how close we are to the lows, as I'm talking about, sitting at 4,000 versus 4,800. But, man, we came into COVID at a price level of 3,200. You're still up 800 points over the last few years. In any other universe, folks, that is crushing the average returns that you're getting in a market, even talking about the pullback we got recently. All right, let's jump around. I mentioned mortgage rates, right? Mortgage demand inches higher as interest rates move lower. There you go. Mortgage applications to purchase a home rose 4% for the week and were 38% lower, though, than the same week a year ago. Well, yeah, a year ago. Mortgage applications to refinance rose 3%, still 85% lower. Average contract rate increased, though, 6.42 from 6.41. So we're talking about an interest rate right now of about 6.5% for a 30-year mortgage. That is so far above what we were used to for so long, folks. And that number, conforming loan balances, $647,000. Yeah, quite a number in terms of what they will supply you with. And I'm sure you saw the articles maybe in the last month or so that some of the areas that are most expensive, right, whether it's New York City especially, or I think it was LA, San Francisco, stuff like that, you can get conforming balances up to $1 million now, which is just remarkable out there. But nonetheless, we're seeing a slight tick up, and I'm telling you, man, Lennar, I was trying to pull up, and I will try and find this development, folks, because it is wild in terms of the size of this development they got going on. I am in Lakeland near Bartow, Florida, and, you know, I'm trying to get the floor plan even as. I'll pull it up, because if you see how big this development is, man, they had to bring Lennar in here. I forget what other one. D.H. Horton, I think, is another developer that is in there. I got to get the exact ones in there. But, boy, it is quite a development, and it is interesting, to use my word of the day, how quickly they're selling those properties over there. You know, rent prices going up. If you have the capital, maybe you're selling another property where you can bring enough for a down payment. And guess what, folks? Eventually, rates are going to come back down to a more reasonable level, and you can refinance. Okay, they're not going to be up here forever. So that's a calculation I'm sure a lot of people are making over there. All right, speaking of trade, speaking of calculations, tomorrow morning, folks, our man Basil Chapman is hosting a live trading webinar. He's coming up next. I encourage you, check out this live event, folks. 5.5 hours. It kicks off at 8:30 in the morning. We'll probably get a little volatility this afternoon. We'll see if that trickles into tomorrow, but we got retail sales coming out tomorrow at 8:30. We have weekly jobless claims. We have continuous jobless claims among others, coming out tomorrow at 8:30. So there should be some economic action. Hopefully we get some volatility during the live trading session. Now, this live trading session, folks, webinar, he's going to be talking about many of the methodologies he uses as well. So if you're new to Basil, I encourage you to check it out, man. Look at all the stuff he's going to be talking about, whether it's his cup, his arch, the rectangle formations, bar symmetry, how certain technical tools available on all trading platforms can assist you. Moving averages. Basil talks about moving averages, displaced moving averages, right? The 3x3 displaced moving averages, how they can sustain the longevity of a position, both long and short, also adding various time frames when you're talking about moving averages. Using the Chapman wave notation of peaks and troughs, the basic fundamentals of the Chapman wave. Money management, stops and buy stops. Also included will be a market overview. Basil's going to give you an overview of his entire analysis of the first quarter of 2023, looking at stocks and sectors that he'll be looking at for the beginning of next year. Christmas is 11 days away, folks. Now, $295, but you get a month of his newsletter, which is $149, folks. That comes with archive webinars as well. It's a great deal, man. You get a month of his newsletter. You get the 5.5-hour live trading webinar. Basil's a great educator. That is tomorrow. Now, folks, please don't wait until the last second, okay? Because this is going to take place in our Discord room. If you're not in the Discord room, we want to be able to get you in there. This starts at 8:30 in the morning, so please don't think that you can sign up at 8:29 in the morning, okay, and just click a button and be in there. We're going to have to get you in the Discord room, so please, I'm asking you, okay, to sign up today. We'll make sure you're in there. If you're already in the Tiger's Den, then it's a no-brainer, very simple. We just have to tag you, though, to give you access to the special room that is taking place with Basil. Okay, so it's still not instantaneous, even if you're in the den. We're going to need a couple minutes to get you in there, so please don't wait until the last second, folks. There's no reason. Sign up today if you want to attend. The newsletter starts the moment you sign up. And that's tomorrow morning, man, at 8:30 in the morning. Can't believe tomorrow is December 15th, but boy, it's been quite a week. And hopefully we get quite a day tomorrow. Basil's going to be focusing on E-mini S&P futures, okay? Other symbols are going to be traded as well. He might look at gold, crude oil, natural gas. He's going to look at some of the multiplied 3-time long-short index and sector ETFs, which I know a lot of traders out there like. Low-price stocks. Some traders like those as well. And then possibly consensus requests, whatever the attendees are looking at, folks. If it's moving and Basil thinks he can trade it, he may take a look at it. So that's tomorrow. Don't miss it, folks. Basil's been doing a newsletter and a program at TFNN for, I think, like 20 years, man. It's pretty close to 20 years. And he's never done a live trading webinar, folks. So it is a special event. There's no denying it. That's not marketing. This is a special event. Basil's been talking about it, man, for a while. He's excited. So please check it out. And for you opening call subscribers out there, it's a no-brainer, man. You get the month paid for. You're already paying for it. So you get the month paid for your next month of the opening call, and you get to attend this as well. So check that out on the front page of TFNN tomorrow morning. All right, what else we got going on? Let's see. Well, we'll talk a little bit of crypto. Always interesting how you got to look at things with a little side eye as this market trades higher on the open. Interesting. S&P's up 13, NASDAQ 100 up 38. In terms of, you should always be taking everything that people say in crypto with a grain of salt, but boy, I'm taking it with even less of a grain of salt now, so, right? The Binance CEO says deposits are coming back in, but sees bumpy road ahead for the crypto firm. And I said to myself, I wonder what their balance sheet really looks like, right? I wonder what their balance sheet, who knows what the Binance balance sheet really looks like? And doesn't mean it's a Ponzi scheme, man, but it doesn't mean it's not either. Because, boy, that FTX deal, man, we'll talk a little bit more as we go forward. There are a lot of venture capital firms that plowed billions, folks, into that company, and they just didn't even care about the fundamentals to really do their due diligence because they just want to get on the roller coaster. We're coming back with Teddy. We're going to talk some futures. We're going to talk some Forex. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the opening call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps right now. You're up by 11 points. We jump over to the dollar index. You talk about some action yesterday. We got the dollar index 103.86. We're going to jump over to our man, Teddy Kegstad. Folks, you can check out Teddy's work. Every Monday, he puts out an issue of the Tiger Forex Report. You can check it out under the newsletter tab at TFNN. He puts out updates when warranted. He covers all the major currency pairs. He's also covering notes and bonds in there, okay? And so much of what's going on right now. Crude oil, notes and bonds, yield, currencies. You saw the action yesterday, man. Boy, we got some action as we gear up for a Fed day today. Teddy Kegstad, good morning.
Good morning, Tommy.
Boy, well, if you want to dive in, what'd you think of the action yesterday? First of all, on some of the currencies, some of the yields. The market gave it all back, Teddy. I talked about a little bit in the beginning of the program that the currencies and the notes and bonds did not, however, give back that entire move. So they are kind of trading still on that CPI number. But what did you think of the general market reaction yesterday as we come into a Fed day today, man?
Well, I think it was overdone by the media, for one. You know, I mean, I hear all this inflation's slowing down, whatever. It's just the pace of inflation that's slowing down. It's not as radical as it was a year ago. But anyone that thinks inflation is gone away is out of their minds. You know, I mean, you just have to go to the store for that. You know, I mean, like, that's just not the case. You know, so I think if you look at it, I mean, we had a sell signal in the interest rate market last week. You know, and it got taken out by just a little bit yesterday, and then the yields came back. You know, So I think you're going to be flat going into the number, and I find it hard to believe that the market already has priced in the low in the bonds and the notes from a couple months ago that counts this rate hike this month. Yet alone, we still have another probably a half a point to go sometime between the next 1 to 2 meetings next year. So I don't see how right now this pullback in yield is going to maintain itself. Now there's another differential that we have to consider is when it comes to Powell. People say is it going to, we talked about this already back in the spring, that by the time we get to 2023, they're not going to be raising 3/4 a point, half a point at a time. They're going to have to pull back because otherwise we're going to have 1980s mortgages before the 2023 is out, as far as pricing, so that's not going to happen. But if the other central banks around the world continue to start to raise rates, the question is the Fed going to do that in tandem to keep their position? Yep. You know what I mean? So, because otherwise we start to lose everything they tried to do by raising rates in the first place. So I think that's something we have to listen to the speak. So I would expect that, that the Fed is going to start to retreat in how hawkish they are. But I think if the ECB, and the BOE, and especially, some of the other central banks continue to raise, especially if they're hawkish at a half a point or a 3/4 rate, it's doubtful that the Fed is just going to stop raising rates, So, it's not about protecting the dollar. It's about protecting what they've done over the past 6 months, especially,
It's some great points, man, and it's I've learned so much just talking to you in terms of how they're all related, and it is interesting how we got so far ahead of everybody else, where our Federal Reserve hiking interest rates, you saw so much dollar strength, and now the euro's coming to the party. What do we have? Do we have an ECB meeting going on this week as well with 50 basis points? Is that what's going on?
Well, the question is what are they going to do? You got to remember, with ECB has been on this quantitative easing thing for so long. They're reversing gears, and that goes against the total narrative. I think that right now, if anything, they're doing more of it as a currency protectionist strategy than they are because they wanted to fight inflation. And here's the other thing too, is that we have this problem that, let's say the Fed stops raising rates. Let's just say that they come out and say, we're done. We've got inflation under control. Well, what happens to the dollar? All of a sudden, the dollar is going to crash, which means that we're going to have inflation just because all the cost of the goods from our imports are going to go skyrocketing. So we're not going to be staving off inflation by them just stopping raising rates. They have to keep this edge against the rest of the world, saying, look out, at any point we may just raise a half a point or 3/4 again. So and that's a question is what Powell is going to do. The transparency with this Fed, to some degree, has been very good. I do like them in some respects, but then in other respects they've been very non-transparent. So we'll have to see what he does, what the speak is after the meeting. But we're in a tricky situation where if you're going to go with the talking heads and the mainstream media, well, then you're looking at everything that they've done for the past 6 months eroding within 2/4 to 3/4. So
I was just going to mention the dollar, man. It's pretty remarkable, the dollar, when you talk about the give back, as to we are almost at prices in the dollar really that we were trading at in April, which is mind blowing when you think about where we are right now with the Fed, right? As in the Fed basically, we might get 50 today, folks, but they're on the 75 path right now. They're on a consecutive, 4 consecutive 75 paths, and we have the dollar index back to where it was in April. So sometimes it gets a little ahead of that time, but boy, man, there's so much up in the air.
And then we have the oil and gold equation that's going to come into play also, and also the yuan. If you look at the Chinese yuan and the Hong Kong dollar in the past 2 months, how the dollar has lost against those two currencies especially, you can see that how this whole Chinese yuan for oil deal with Iran and also some other things are actually, they were already planning this a couple months ago. The news finally came out for what they're doing. This is an attack on the dollar. So if the Fed does they're not going to get dovish, but if they stop raising interest rates while the other central banks are raising interest rates, and if oil starts to trading gold for Russia, and then also if Iran has the deal, like these are things that those currencies, all of a sudden the value of the dollar could just get destroyed, So, and that's not a good thing. Then we're looking at then we're looking at the euro back up at like 125, 130, the pound back up at 150, the yen back down at like 105, and think because the yen, the yen and the interest rate differential won't matter with the yen anymore. because if the Japanese continue to buy their oil from Russia and trade with these other countries, which why wouldn't they? The sanctions on the Ukraine are destroying Europe, and now they're going to start to have some really bad impacts on us too in the U.S. dollar. So we're in a very touchy situation, So, and I would be
getting
very
the gold bugs out there a little excited, Teddy, with the way you're talking about the yen. I think because boy, those are some big prices, man. Do you have any take on what? And I know you're not really a hardcore gold trader, but do you look at the gold market? What you see there? Because boy, if you get the dollar yen driving that type of action, right? I mean, those currencies. Sorry?
Especially for long-term cycles, because if you look at the ebb and flow, you have the gold market that goes like this, the interest rate markets like this, and the equity markets. So those three things go in not in tandem, but you have to watch the waves of when the trends really change, because they absolutely do influence each other. And if you have gold and oil, remember, oil is a function of certain currency pricing. Gold is a function of currency pricing.
Definitely.
People, when they take on certain positions, I always tell people, depending on what market you're trading, you may be trading one market, but you're synthetically trading another one. There's a lot of trades that you're synthetically trading gold, or if you're buying gold in certain currencies, you're trading currencies. You know what I mean? So, these things are all interrelated, and I think we're going to see some very big moves in those markets, or God forbid we do. What happens if oil starts to really surge, gold surges?
Well, I appreciate the education. I've learned so much just talking to you, Teddy, about those relationships, gold, crude, currencies, man. I appreciate it, Teddy. We'll talk to you next week, man.
Sounds good.
Okay, man. Have a great one.
Guys,
folks, check out the Tiger Forex Report. You heard it right there. We'll be right back to finish up the program.
Their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps positive by 17. NASDAQ 100 up 41. We got the Dow up 155. And you got Tesla in the red, down another 1.5% today. That's a tough one, folks. Not sure where that finds a bid, man, as you're at levels that not many would thought that you'd see, man, to say the least. Yeah, absolutely remarkable, man, that Elon, that's where he sold and came out and said he was going to buy Twitter, folks, at 382. And Tesla's at 158. Watch out, baby. And please, folks, check out the Tiger Forex report. We finished up that interview pretty quickly with Teddy, but he was talking about, the interrelationship between, you think you're trading one thing and you're trading another. It's just the relationships that exist between commodities, between currencies, right? And then how they drive, whether it's yields, bonds, all of them related. Even if you're not a hardcore Forex trader, check out the report for 30 days, man, because I've learned a tremendous amount, over the years of interviewing Teddy. He's got a lot of knowledge, and boy, in this market right now, driving so much of what's going on. And don't forget, coming up next, folks, our man Basil Chapman, live trading webinar. He's not doing his program tomorrow, folks, because Basil's going to be in there live trading starting at 8:30 in the morning. So don't delay to sign up late tonight or tomorrow morning, please. Sign up today. We'll get that done, and you'll be all set, man, in there with Basil. Live trading tomorrow from 8:32 till 2. And remember, we get retail sales, and you get weekly jobless claims as well tomorrow morning. Excuse me. Okay, jumping back to the Fed real quick. Some of the numbers we're talking about that stuck out at me, talking about where they are. How about this one, okay? Prior to this year, the Federal Reserve had not boosted the benchmark borrowing rates by more than a quarter point at a time in 22 years. 22 years they hadn't needed it. The year 2000, right? The old Conan O'Brien skit, remember? In the year 2000, that was prior. We're 22 years past that. They hadn't done it in 22 years. They've done it 4 straight times, and they're expected to go to 50. Just to put in context where we are and how extraordinary what they're doing is in this market right now. So we'll see where we go from there. You got people on two sides of the market talking about whether they're going too far or they haven't gone far enough. They got to stay the course. But we find out at 2 o'clock today. And keep your eye on whether they're going to talk about anticipate ongoing increases or just maybe some increases. The wording going to be important. Thanks so much, folks. Stay tuned for Basil. Check out his live trading webinar coming up tomorrow. Have a great one, folks.